The week's end top stories at NBR. King Honey founder is disappointed. Simon Bridges giving away few clues about his intended career after politics. Architectural glass products disrupts market. And there's more coming right up. Kia ora and welcome to NBR This Week, 100% subscriber funded and proudly brought to you by you, as is every story at nbr.co.nz. The week's end top business stories, then a look back over the week's top stories from our daily video business news bulletin, NBR Today. It's Friday, March 18th. I'm Paul Brennan. Thanks again for joining us. King Honey founder Terry Jarvis is disappointed at the way Me Today has portrayed an unexpected revenue shortfall from his business after it was acquired by the NZX-listed skincare and supplements company mid-last year. Commenting prior to Friday's special shareholder meeting, which successfully approved a $6 million capital raise to address cash flow issues partly caused by the King Honey shortfall, Jarvis told NBR that Me Today had all the numbers before they settled the deal. Me Today bought King Honey from interests associated with Jarvis, the Sky TV co-founder, for $36 million in a deal completed at the end of June 2021. Outgoing National MP Simon Bridges is giving away few clues about his intended commercial career after politics. But Bridges, who will leave Parliament by Easter, said it was no secret he has an interest in infrastructure and technology. Simon Bridges joined NBR political editor Brent Edwards.
Also, the other thing that I've said, it'd be interesting to you, and again, I'm sorry, I'm not trying to be unduly mysterious, but one thing that is true is in politics, you turn your hobby into your profession. I like talking, I like writing about politics. And so, I am interested in one or two media projects in that regard as well.
Outgoing National MP Simon Bridges with Brent Edwards there. New Zealand's sanctions list targeting Russia has expanded overnight, with 13 individuals and 19 entities added as a result of a Russia Sanctions Act, which passed under urgency on March 9th. Sanctions now extend to Russian President Vladimir Putin, the 12 members of his Security Council, one bank, and 18 other entities. Foreign Minister Sergei Lavrov and former President Dmitry Medvedev are among those who have been named. However, despite a campaign by Greenpeace and others, local asset-owning Russian businessman Alexander Abramov is neither on the sanctions nor the travel ban lists. New Zealand high-tech manufacturing is getting a boost with news a Christchurch company will part-own and produce a world-first piece of technology for the rare inherited disorder phenylketonuria, PKU. All newborn baby heels are pricked to test if babies have PKU, a disorder that sees sufferers permanently unable to break down an amino acid called phenylalanine from the food they eat. And anyone diagnosed with the disorder needs constant testing throughout their lives in order to avoid debilitating effects of the phenylalanine buildup, including brain damage. Testing currently must be done in hospitals or results mailed into centralised labs. But a revolutionary new solution to allow those with PKU to monitor their level of phenylalanine at home to avoid a dangerous buildup of the amino acid is set to be commercialised in the US. The company behind it, Apotec Biosciences, is now funded in part by local medical device firm Canterbury Scientific. As part of the deal, the New Zealand company also has an option to manufacture the devices once the technology receives clinical validation. Architectural glass products say adoption of Internet of Things, IoT technology, allowed it to disrupt the market, garnering an almost 50% market share in the North Island in just a few years. IoT is the connecting of physical things with sensors and other tech to exchange and collect data. When launched by former NBR Rich lister Mitchell Plaw in 2019, AGP installed IoT tracking devices made by New Zealand logistics tracking business Pollen 8 on 1,750-odd delivery trolleys worth $3,000 each. The trolleys are used to transport the fragile glass product to customers. AGP Systems Manager Jean Sanford said being able to track the trolleys around the clock has made recovery much simpler and delivery more efficient. The full details of those stories and more are at nbr.co.nz right now. I'm Paul Brennan. This is NBR This Week. A look back now at the week's top NBR business stories from our daily video business news bulletin, NBR Today. And from Monday, a major announcement by Ampol. Z Energy takeover bidder Ampol has announced the sale of its New Zealand fuel retail subsidiary Gull for an enterprise value of $572 million. Selling Gull was required for Ampol to get Commerce Commission clearance to buy Z Energy. In a statement, Ampol said it had sold Gull to Australian private equity firm Allegro Funds. The transaction is conditional on the Commerce Commission approving Allegro as buyer, Overseas Investment Office approval, and Ampol completing its acquisition of Z Energy. Ampol said it had committed to a 5-year supply agreement with Gull, as requested by Allegro, subject to annual price reviews and termination rights. Ampol said Gull's manager Dave Bodger and his team would be retained by the new owner. It's NBR This Week, the week's top 5 business stories from NBR Today. From Tuesday, hotel developers chasing $31.6 million. The developer behind the $300 million Park Hyatt Hotel in Auckland's Wynyard Quarter is chasing a contractor for more than $30 million after an agreement to fit out the luxury hotel fell over. Taking action in the Auckland High Court, Auckland Hotel Investments, controlled by Fuwa New Zealand, successfully stopped the contractor CDCIC NZ Construction from being removed from the company's register to enable it to pursue the claim. CDCIC's sole shareholder and director is Sealy Cutter, and court documents said he'd been difficult to serve. AHIL engaged CDCIC to undertake the fit-out of the hotel in May 2018 and terminated the contract in January 2020 following a dispute over CDCIC's performance, contracting another business to complete the fit-out. AHIL said that it incurred significant additional costs as a result and says it has a claim against SDCIC for approximately $31.6 million. It's NBR This Week, the week's top 5 business stories from our daily video business news bulletin, NBR Today. And from Wednesday, another food delivery service about to launch. A multi-billion-dollar US food delivery service is set to disrupt New Zealand hospitality with a launch understood to be planned for next month. DoorDash, which listed on the New York Stock Exchange in late 2020, is set to establish a New Zealand offering going head-to-head with other established food delivery services such as Uber Eats. The company would not confirm details of the launch or its planned business model, but NBR understands it hopes to pitch itself as being significantly cheaper for local hospitality operators than rivals, some of which are said to charge up to 30% of each order. DoorDash is advertising for multiple New Zealand workers on LinkedIn. It's NBR This Week, this week's top 5 business stories from NBR Today. From Thursday, zoning challenge for Queenstown development. A failed appeal over planting trees has unmasked future legal action from Winton Land over the future of its Airburn Farm Waterfall Park project, but the company says it is par for the course. Earlier this month, Winton subsidiary Waterfall Park Developments attempted to appeal an Environment Court decision made last year that found its planting of a 305-metre line of Leyland cypress trees was not a farming activity, but rather landscaping and needed consent. Speaking to NBR, Winton Chief Executive Chris Meehan said the company had secured resource consent for a 380-room hotel and associated conference and wellness facilities. This is NBR This Week. Now we're up to Friday's top story. An independent barrister's report has strongly criticised the Financial Markets Authority for its handling of conflicts of interest in providing advice on KiwiSaver default providers last year. The report from Christy McDonald focused on disclosure of a conflict of interest involving then FMA Chief Executive Rob Everett, whose brother-in-law, Gary Scott, is Chief Financial Officer of KiwiSaver provider Booster. In a review of default providers finalised in May, Booster was one of 4 providers to retain its default status, allowing KiwiSaver money to be channeled automatically into its funds. 5 other providers lost default status: AMP, ANZ, ASB, Fisher Funds and Mercer. McDonald said although the conflict did not affect the FMA's advice to the Minister on selecting default providers, there were several failures in how it was managed. In particular, the FMA did not disclose the Chief Executive's conflict of interest in its advice to the Minister or otherwise when engaging with MB about risks relating to the default KiwiSaver provider process. It should have done so, McDonald said. The full details of those stories and more are at nbr.co.nz right now. This weekend at NBR, in Fact or Fiction on Saturday, Brent Edwards and Grant Walker debate how National will fare from a by-election in Tauranga. while Neville Gibson's book review on Sunday looks at the closing of China's gateway Hong Kong, which was once the world's freest economy. I'm Paul Brennan. Thanks for watching and listening to NBR This Week. Have a great weekend and join me again around lunchtime for Monday morning's NBR Trending Stories, then from 5:30 Monday for another NBR Today.